Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. And sometimes those stories are about selling your company's lunchboxes to someone else, so you can keep leasing them. Wild, right? Today we're diving into a document that shows us exactly that. Star Equity Holdings, Incorporated, or Star Equity for short, recently filed a report detailing some significant deals. It may sound a little dry, but trust me, Teresa's story here about how companies get creative with their assets. So, let's get straight into it. Star Equity made a move through one of its subsidiaries. Think of the subsidiary as a kid helping out the parent company. This kid, Alliance Drilling Tools, LLC, or ATT as we'll call it, has decided to sell some of its important properties. Now, this isn't just a simple sale. These are sale and leaseback transactions. That means ADT is selling its physical locations, but then immediately leasing them back from the new owner. It's like selling your house, but then renting it back from the new owner so you don't have to move. This is often done to free up cash without disrupting the business operations. One of these deals is for a property in Midland, Texas. ADT sold this place, referred to as the Texas premises, for $1.1 million. Then there is another property in Vernal, Utah. This one was sold for $0.6 million. And finally, a property in Evanston, Wyoming was sold for $1.7 million. After selling these properties, ADT will sign a lease to continue using them. These are called triple net leases, which is a common type of commercial lease where the tenant, in this case ADT, is responsible for all the costs associated with the property, including property taxes, insurance, and maintenance. Basically, ADT is still on the hook for everything, including monthly expenses, utilities, you name it, even though they don't own the building anymore. These leases are set for a pretty long time, 20 years, with an option to extend for another 20 years. This means ADT gets to stay in its locations and continue operations without interruption, while Star Equity, the parent company, gets some immediate cash from the sales. The company expects these deals to close in the first 3 months of 2026. Of course, there are always some conditions to be met, like making sure the titles are clear, getting insurance sorted out, and the buyer confirming their financing. It is important to note that ADT will continue its operations at these locations, so the core business should not be negatively impacted by these transactions. Now, let's look at the company's stock. Star Equity Holdings, Inc. has common stock traded on the Nasdaq under the ticker symbol. STAR, they also have preferred stock like Series A traded as STAR-P and something called preferred share purchase rights. This is pretty standard for many companies showing different classes of ownership and rights. This filing is a Form 8, which is a report of significant events that a publicly traded company is required to disclose to the public. It is like a company's way of announcing major news in real time. So what is the story here? Star Equity Holdings, through its subsidiary ADC, is essentially mortgaging its physical locations. They are selling these properties to raise capital, probably to reinvest in the business, pay down debt, or just have more operating cash. In return, they are committing to long-term leases, indicating that these locations are crucial for their ongoing operations. From a financial perspective, this move is a way to unlock the value tied up in real estate. Instead of having cash sitting in buildings, they are converting it into liquid assets. The total amount raised from these 3 sales is $1.1 million plus $0.6 million plus $1.7 million, which comes out to $3.4 million before any commissions and expenses. This is a decent chunk of change, but for a company, it is important to see how this cash is being used. Let's think about the implications. On one hand, this provides immediate funding without the need to take on traditional debt, which often comes with interest payments. On the other hand, they've given up ownership of valuable assets. They will be paying rent for these locations for many years to come. The question is whether this is a smart strategic move or a sign that the company might be facing some cash flow challenges. If Star Equity is using this money for growth opportunities like expanding their services or acquiring new technologies, then it is a positive step. However, if they are using it simply to cover operational costs or pay down urgent debts, it might suggest a more precarious financial situation. We don't have specific financial tables in this filing to analyze, like revenue reports or balance sheets, which would give us a clearer picture of their overall financial health. This filing is primarily about the transaction itself. However, based on the information provided, the company appears to be actively managing its assets to meet its financial objectives. The fact that ADT continues to operate from these locations suggests that the business itself remains strong and viable. The key will be how effectively Star Equity deploys the capital generated from these sale and leaseback agreements. Looking ahead, we will want to keep an eye on subsequent filings to see how this cash infusion impacts their financial statements. Are their revenues growing? Are their debts decreasing? Or are they incurring new forms of financial obligations? These are the questions that will tell us if this was a brilliant move or a temporary fix. So, what is my take? Star Equity is playing a clever game of real estate finance. They're accessing capital by selling assets they use and then leasing them back, ensuring business continuity. It is a common tactic, but its success hinges on how the company uses the freed up cash. If it fuels growth, it's a win. If it's just a bandage, then we might see other issues surface down the line. The lack of detailed financial tables in this specific report means we can't definitively say if this is a sign of strength or a cry for help. But it is definitely a strategy to watch. Alright, that is our breakdown of Star Equity Holdings' latest move. What do you think about this sale and leaseback strategy? Does it signal smart financial maneuvering or something else? Drop your thoughts in the comments below. If you found this analysis useful, please hit that like button and subscribe for more corporate deep dives. And don't forget to check out our Discord server in the description for more discussions and insights. Thanks for watching, and we'll see you in the next episode.